Hi there, it's me, TM, and wanted to talk to you about the Fed, inflation, and the economy, since this is happening right now. So you may find it interesting and appropriate. So let's take a look here and see what we got. Just like I said, there's the title, Fed, Inflation, and the Economy. So we have multiple things happening at once out there in the real world. And this is an example of things that have happened in the past and will happen again. So the Federal Reserve. The Federal Reserve is the nation's central bank. It is responsible for a number of things. The biggest single thing it does is control the nation's money supply. Now, that's not the same as, say, Congress and the president agreeing to borrow money. It's just the amount of money that's in circulation. And just to give you, this is, I think, a good example of why monetary policy matters. Some years back, there were a group of young couples with kids. They formed a babysitting co-op, and they gave everybody 2 coupons, and you could exchange it with another couple in exchange for which they would watch your kids at night. So everybody was going to get good babysitting from people they knew and trusted, and they'd get to go out. Well, in a very short period of time, people were going out less than they ever had before. Why? There wasn't enough money in circulation. Everybody was willing to babysit, but having only 2 coupons, nobody wanted to spend that coupon. So finally, they figured this out, and they printed up a whole bunch more coupons. And at that point, they had inflation because there were so many coupons. Everybody wanted to go out, but nobody wanted to babysit since they all had as many coupons as they wanted. So ultimately, they arrived at a number of coupons in circulation that meant that the economy functioned. So in the United States, we had a central bank way back in the day, the Bank of the United States, which had 2 versions, and it did all right at managing the nation's money supply. And then this guy came around, Andrew Jackson. Now, when I was growing up, he was regarded as a hero because he killed lots of British in New Orleans, but quite frankly, not one of the better presidents. He was a racist. He did very badly by our allies, the Cherokees, and he got rid of the Bank of the United States, which meant that for 80 years, we did not have a central bank. The money supply was entirely dependent on how much gold was in circulation. And really, there's not that much gold in the world. And so we had a depression basically every 12 years by some accounts, from the 1870s to the 1890s was one long depression until more gold deposits were started. But ultimately, the government realized long after Andrew Jackson had passed that we needed a central bank. They'd had a series of panics in the 1890s and early 20th centuries. The panic was the word they used because they hadn't invented the word depression yet, which was chosen because it sounded somehow nicer than panic. There's Woodrow Wilson, also not a great president, but he signed in 1913 the Federal Reserve Act into law. And lo and behold, we had a central bank again. Now, what do they do? You should be asking. So the Federal Reserve System is the nation's central bank. They control the money supply. There's the Federal Reserve Board of Governors, the president and the chair and vice chair, who are chosen, selected by the president, confirmed by the Senate. There are 12 regional Federal Reserve banks for every part of the country, and the Federal Open Market Committee, which is very important, and that includes the Board of Governors and the presidents of the reserve banks. Now, the Federal Reserve is an independent private government agency, and one of the reasons for that is that you probably don't want the Fed making policy according to the whims of elected officials. That's just a recipe for disaster. The Federal Reserve banks are private, and this is important to understand because these are basically a bunch of bankers. And if there's anything bankers don't like, it's inflation. It erodes savings. It makes their loans cheaper. It's all in all, especially for bankers. I'm not convinced it's good for anybody, but it's bad for bankers. So the Open Market Committee has a lot to say about what interest rates are going to be. And we'll we'll see why that matters in a minute. So, and then they conduct the nation's monetary policy, as we said, maintain the stability of the financial system. If we go back to 1999, when everybody thought all the computers were going to crash when we hit 2000, the Federal Reserve actually did a really good job. They went to every bank in the country basically and said, you have a plan for dealing with this. And a handful of banks that didn't, the people who were running them the next day were not running them anymore. So the Fed did and does that part of its job fairly well, supervising and regulating financial institutions, payment settlement system safety and efficiency, promoting consumer protection and community development. Yeah, those things are probably listed in order of importance with the Fed. But anyway, so 12 regional banks. We have an office in Seattle. I have been there once. Let me tell you, you need much more than a key to get inside of that thing. Our Federal Reserve Bank is headquartered in San Francisco. The Seattle office also handles stuff for Alaska. So now this is where I think it gets interesting. The Fed really has two things it's supposed to do. This is its assignment: stable prices, right? Low inflation, and also a strong economy, which generally means high employment, right? People have money in their pockets. Here's the problem. Here's the challenge with this. If the Fed managed to create conditions that resulted in high employment, people would have more money. And if they have more money, they're going to spend some of it. And if they spend some of it, that's going to put upward pressure on prices. On the other hand, keeping prices stable means that fewer people will have jobs. I mean, that's just it. So the Fed has these two tasks, and they frequently run into each other headlong. And that's about what we are seeing at this moment. So inflation is a general increase in the level of prices, and it can be caused by a number of things. The two rather badly named things that generally are responsible for inflation are one, what's called demand pull inflation. People are buying products, bidding up the prices, and that's inflation, right? The other is called cost push. So let's say there's a break in the supply chain, as we witnessed over the pandemic, then that means inputs are less available, and so the price of those get bid up. So it can happen either way, and in our time, it seems to be a little bit happening both ways. But just to look at inflation here, this is U.S. inflation from 1775 to the present. If you could actually see these numbers on this chart, the thing that you would understand, the times when inflation has been at its highest, except in the late 70s, we've been at war. And when we're at war, the government spends an awful lot of money because they have to, and that can bid up prices. Now, in World War II, they had price controls, and while that did sort of limit prices, it also limited supply. So a lot of goods were in short supply during the war. So I'm told. I'm not quite that old. And you can see that also we've had times when prices were falling. So particularly there, 1935, the depths of the Great Depression, prices actually fell. Hasn't happened for a while, and may not happen again anytime soon. But you can see that there's a lot of ups and downs to inflation. The highest time was during the American Revolution. The government was not well funded. It didn't have a lot of fiscal ability to sort of tax and spend. And as a consequence, they borrowed a lot of money, and prices went up. Taking a look, a little shorter time frame, basically from before World War I to our time, once again, you can see that after World War I, there was a very steep recession. Government spending was greatly reduced, and that meant prices fell. Same thing happened in the Great Depression. So by and large, since then, however, prices have gone up. Now here in the 70s, what caused this inflation? A number of things. Government was spending a little more money. Oil, right? Oil. There were oil price shocks. There was crisis in the Middle East. Oil producing nations, many of which were Arab countries, decided, they'd had enough of this. And so they began to restrict the supply of oil. Now that did a couple of things. It drove up prices. And ultimately, it took the Fed stepping in and creating the severest recession since the Great Depression to sort of break the back of inflation. And as painful as that was, it might actually have been necessary simply because at that point, people expected inflation, and it became sort of this self-fulfilling prophecy. The most common example was Johnny Carson getting on to do his monologue on the Tonight Show, and he's making a joke, and he says, "You heard about the latest shortage? Toilet paper." And what do you know? The next day there was a shortage of toilet paper because people believed this and went to the store and bought up toilet paper. Same thing happened during the pandemic. I still don't get that one, but anyway. Taking another look here. So we get some price spikes having to do with here, removal of price controls at the end of World War II. So prices went up again. Korean War caused a spurt of inflation. The 1960s, we had kind of, at the late 60s, a big economic boom. And then Richard Nixon got elected and managed to get the budget balanced, but that produced a recession. Then we had oil price shocks in the 70s, a little bit of inflation from the first Gulf War, and then a little bit of inflation from rising gas prices in 2008. So worldwide, however, if you look at this, while we're sort of on the high side of inflation, we're still not anywhere near what some other countries are facing. Apparently, Turkey right now has the highest inflation on earth, and that's because their leader doesn't believe in monetary policy at all. So things are a bit crazy there right now. Let's see. So what can the Fed do about this? Well, as we said, the Fed Open Market Committee works to set interest rates. So think of it this way. If we raise interest rates, the cost of borrowing goes up. And if the cost of borrowing goes up, like anything, people will borrow less money. As prices rise, people tend to want less of a good or service. So if they're not borrowing, they're not buying as much, and that can slow the economy down. So the Fed's hope is that they can slow the economy down without provoking a recession. I'm skeptical, but we'll see. We can hope for the best, right? How do they do this? Well, they have some tools. They can set reserve requirements, which is how much money banks have to have on hand. And right now, beginning with the pandemic, the reserve requirement is almost zero. So they can lend out as much money as they want. The Fed was trying to forestall a credit crunch happening, which seemed to have worked. Now, the discount rate is the rate that banks are charged for overnight loans, because banks are constantly lending and borrowing money, and they have to make their books balance every day. It used to say if you were going to the discount window, your bank was in trouble because that meant no one else would lend you money. Since the Great Recession in the late 2000s, that was no longer the case. Now, this is the biggest thing that they do. And this is called open market operations, hence the name, the Federal Open Market Committee. So they can increase or decrease the amount of money available to financial institutions, which of course necessarily affects the cost of borrowing. So if the Fed wants the economy to grow, they inject money into the economy by simply selling U.S. Treasury securities to member banks, and by buying them from member banks. I'm sorry. So they buy Treasury securities. So banks buy Treasury securities for sort of a safe place to park their money. The Fed wants them to have more money on hand so they can make more loans, drive down interest rates, increase economic activity. The Fed buys them. The Fed holds the securities. Now the banks have more cash. Okay. Conversely, if they want to slow the economy down, well, they raise interest rates in large part by selling Treasury securities to banks. And the way they manage to get banks to do this is by simply, it's simple supply and demand. They price them attractively enough. The banks say, "A good deal, we'll buy those." But that means the banks, while they hold the treasury securities, which are paying some interest, they have less money to lend out, and so interest rates go up. Now, where this can really have an impact, and did in 1982, the biggest loan most people will ever take out is a house. And if interest rates are too high, housing prices effectively become too high. They become out of people's reach. So in 1982, when the Fed was trying to sort of break the back of inflation, and they succeeded, they crushed the housing industry. I talked to realtors at the time who hadn't sold a house in 6 months. And of course, that's how those folks make their living. So the problem is that a quarter of the economy can get stomped on if the Fed pushes interest rates too far too fast. So we'll see how that goes. I mean, already we're seeing this happening. You know, mortgage rates have gone from 2-3% to now as high as 6%. Well, that pushes a house out of many people's affordability. So why now? Why is all of this happening now? Well, a number of things have happened. The pandemic interrupted the supply chain globally so that inputs are harder to come by. That has driven up the price of many goods. The other thing that's happening, of course, is the labor market. In 2021, something like 47 million people quit their jobs. That was damn near a record. Lost in that, however, is that except for 2020, since 2009, that number has gone up every year. So what's happening is, and particularly with the pandemic, people said, hey, I think I'd rather stay home. They looked at their portfolios. They realized how old they were, that they were close to retirement. Why don't we just do that? And so that's had a big hammer on the labor market. So the supply of labor is down, which is forcing companies to pay more. I went to Brown Bear Car Wash today, and they had a help wanted sign, and they're offering retirement benefits and healthcare and tuition assistance. And it's like, wow, this used to be a minimum wage job. Well, that's what firms are having to do to attract workers. Those costs, of course, get passed on to consumers. So it's a mixed blessing. I mean, I'm glad to see people get paid more. But overall, that's going to be good for the economy. But in the short term, that can also help bid up prices. So there's that. So what's next? What will happen as a result of this? Well, obviously, I don't really know. But if you go online and you see some idiot predicting the next doom and gloom or boom or whatever, they have no idea either. And frequently folks like that are doing amazing things with numbers, bending and twisting them. We could have a recession. It's not likely to be a huge recession, not like the late 2000s, because it is not part of a financial collapse. So it could be a garden variety recession. Recession, remember, is 2 quarters of economic contraction as measured by GDP. So the economy's literally shrinking for 6 months. So 6 to 9 months out, the economy begins to turn around. Other things being equal, unless we elect really stupid people to office who don't understand sort of how these things work. I think we had one of those recently. But anyway, so things to take away. This is not really Joe Biden's fault. He inherited this mess. The Fed, being bankers, will put the squeeze on the economy to try to wring inflation out of it again. It's a mixed blessing. Honestly, you don't want to live through the late 70s again when prices were going up. If nothing else, it tends to make people feel powerless, and that sort of impacts the legitimacy of the government, and how legitimate we regard the government at the moment seems to be a big issue for a lot of people. So heard a woman in the gym this morning. I think she was on some kind of cell phone or something. She had the Bluetooth thing in her ear, and she's saying, I don't need the government. And I thought, well, sweetheart, yeah, you probably do. But anyway, if you have any questions, let me know. You can reach me by email, is probably easiest. We're going to talk a whole bunch more about this later in the quarter for those of you in Poli-Sci 101. But I thought I'd talk about this now because now it's when it's happening. So anyway, let's see here. I can make this all go away. Maybe not. Well, now, anyway, Good to be with you, and I hope to talk to you all more soon. Thanks.